Hello, everyone. It's that time of the week. It's time for the Security Token Show. We're your hosts, Herwig Konings, and of course, my co-founder, Kyle Sonlin. How are you this fine Friday, man?
Gosh, Herwig, I am feeling good. 240 episodes in, and we haven't lost a single bit of momentum, Herwig. It's another great week of news with some exciting updates from the industry. Just because it's summer doesn't mean we can't have some great things going on.
Always here to give you the beat on the market. This week, once again, with Nico Pantelis, let's dive right into the market movements. Hello, Nico Pantelis. How are you this week? Joining us from Dubai, partner at Blue Bay Ventures, a prominent venture fund in the RWA space. Glad to have you on the show once again.
Gentlemen, good morning. Yes, it's getting really hot over here in the desert in Dubai. But hey, warming up for the summer. Let's go.
That's all right. We feel the same thing in Miami. Needless to say, we got some great news to talk about this week, I think. I love seeing this first piece of news more and more. I'm talking about ratings. And Open Eden, which has a treasuries products, their T-bill has officially gotten a rating from Moody's, which I think is pretty legit. It's something that is necessary to usually bridge a lot of TradFi firms. They have certain, especially bigger firms, mandates in order to only be able to invest in rated products and other things. So in order to get digital adoption, tokenized asset adoption, we're going to need ratings for security tokens. And Moody's is one of the big three rating agencies in the world. So this is naturally going to be respected. And I think we're going to see this trend continue with more and other security tokens. What do you guys think?
Herwig, this is very important. I'm coming from TradFi, as you guys know. I'm an older guy, and I know how this market works. And there needs to be some stickers on these boxes. That's how it works. If there's no stickers on the box, we're not buying the boxes. That's just how Wall Streets operate. And these are the stickers, these A ratings and these other ratings. So if TradFi money comes into these blockchains through funds like Biddle and others, they have to know where they can put their money following that transaction when they have liquidity. So yeah, they will use their normal habitat, their normal way of going around, and they will put money into the boxes with these stickers on it.
Yeah, Herwig, I actually think this is really, really big news, because we've seen Moody's get involved in using blockchain to improve a credit rating, or in some cases we have seen them use it as a detractor for particular credit ratings due to the reliability of networks. And we've reported on that here on the show before. But I do think that this one is fascinating because it is the first DeFi company to create a product that has been rated by Moody's. This is also a very accessible retail token versus what we've seen in the past, which were more institutional style corporate debt offerings. So this is a very traditional rating agency and rating for a non-traditional style of investment product. This is a T-bill token that's represented as a marker of your participation in a vault, which is something that is very unusual for the traditional financial world. So I think that them being able to get this rated by Moody's and receiving an A class of rating, it looks like it's a single A, but still an A class rating, is really, really impressive. And I think exciting for the DeFi space as it continues to try to legitimize itself against these traditional institutional properties. And to Nico's point, having that sticker rating does create an opportunity for other institutional investors or enterprise investors to actually consider this as an investment opportunity, as opposed to many of the crypto offerings in the past.
I mean, you nailed it, Kyle. I love that. DeFi being rated. I don't think people would have thought they would have seen that anytime soon. And here it is happening. So kudos, Open Eden, on that move there. I also saw some other big news that I think is really cool. We know that Citibank has been in the game quite a bit now. Citi announced their token services before, and mostly focused on treasury management, cash solutions. But now, recently at a symposium, they announced the CDAP, City Integrated Digital Asset Platform. The way that I kind of look at this, this is meant to be designed for the entire organization to start to leverage the blockchain solutions that, or the digital asset solutions that they are developing. To me, this is essentially a rival to Onyx in a way, right? You got Onyx, which has their TCM, their repo markets. They got digital debt services now. They got their JPM coin and other things, right? So I think we're going to start to see Citi continue to launch more applications of tokenization here through this platform. And it's great to just see another Wall Street giant start to develop similarly.
It's a good reminder that if you're building an enterprise or B2B or institutional grade solution in the financial services space, pick the most boring name ever. We now have GSDAP, Goldman Sachs DAP. We now have CDAP, which is Citi's digital asset platform. The TCN by JP Morgan is the Tokenized Collateral Network, which is maybe a little bit more interesting. But these types of players, they want to hit the nail on the head. They want it to be boring. They just care about getting the job done. So, there's a lot we could go into this, but I just think it's funny that, of course, of all names they had to pick, they went with CDAP to mirror the existing products on the market.
Yeah. My comments, you guys know I'm not a real big fan of these private blockchains. I think we're working to a decentralized capital market and not a private centralized blockchain, because it's just not what this new ecosystem is all about. But I guess this is the way they. No, it's not surprising, because it's of course compliance and all this. Yeah. It needs to be gated and it needs to be controlled, and it's just it's the analogy with the intranet versus the internet. I think all these institutions will first need to go to their intranet phase of the blockchain, and then like what Larry Fink does, say, hey, let's all move to these decentralized blockchains, because that's where the real action is going on. So
if I had to draw a line, and I'm not saying this as any sort of industry standard or anything, this is just personal. This is sort of blockchain versus tokenization, with the asterisk being tokenization really using a public blockchain, right? Because what we're seeing today is TradFi, which is over here, way behind. And we've got two technologies. We've got blockchain, which can do certain things and bring us to here. And then you've got tokenization, which can bring us light years ahead of that with all these other applications, specifically using a public blockchain. And I think we got DeFi, specifically crypto, pushing those boundaries, showing us what tokenization can do in the future. Whereas as we're talking with compliance and other, adoption curves, blockchain is sort of the first wave to get tackled by Wall Street. They're going to do it using the private version, and they're going to leverage it to the extent that it is better than what it is today. But we all know, and it's funny that everybody knows, even the folks at these firms, they know that eventually they'll move towards a public blockchain.
They know, and I think they're also waiting on some more clarity in regards to regulations, especially in the US, where all these big investment banks are headquartered or mainly operational, where their most liquid assets are. You can understand from a practical standpoint, but in the end, I'm not a big fan of these private networks. But we'll see.
I think your sentiment is right, Nico. I don't want to push back too hard, but I do think from a practical perspective, they need to get their own ducks in a row within their own ecosystem, and then plug it into traditional existing public solutions, right? So from a building blocks, like a Legos perspective, they always were going to have to build their digital asset platform to aggregate all of their demand internally, all of their deposits, all of their transactional equivalents, bring that up into one layer, which then they can plug into a lot of the existing infrastructure that exists in the blockchain space. From my perspective, they always would have had to build this digital asset layer.
Sure. And what I'm getting feedback from the industry, and also from what you read and what I hear in the hallway, is that these entities are very advanced in this new technology. So that's some hopium over there.
Right.
That these guys
It's
will.
worth noting that they mentioned that at least, despite it being, I believe, some form of hyperledger, a form of their own that they've obviously developed, but they mentioned that they plan to at least have access to other DLT-based platforms. Again, no sign of true public blockchain, probably for compliance reasons. They don't even want to mention that in any kind of capacity. But it is a sign that they're looking at interoperability. They recognize that that's one of the benefits of being on the rails of blockchain or DLT
and risk
applications. Yeah, and they
don't forget the risk item.
Of course, I believe there was Citi that also came up with the regulated liability network first. It's like they're definitely a mover now, and I love to see that they sort of at least formalized it, despite Kyle's criticism for the brand there. Pretty good. But great to see Wall Street at least making the steps, even if it first means crawling.
They're coming.
First crawling, then walking, then running. Moving on,
yes.
Speaking of running, I think this is the example of where we are headed, which is Mantra blockchain, making a lot of moves lately. They're a layer 1 designed for RWAs. I think this is great. They have unleashed the Ondo USDY vault. So obviously everybody knows Ondo is one of the biggest movers in the space. I think they have the largest combined assets under management potentially with their two products. And USDY is focused on international investors. So they've got a lot of retail. I think it was over 1,000 holders. And now they can access a vault. So this is another example, just like we saw with Open Eden tapping into DeFi. We are now leveraging the Mantra blockchain in this case for an Ondo product to set up essentially a vault to earn yield. I think this is really cool. What do you guys think?
Yeah, it's the same mechanism as these liquid staking tokens. They are used for, let's say, Ethereum staking or other. It's very clever, getting the rewards accrued into the value of a token, getting that distributed on permissionless networks. It's the way forward. Of course, there's also a bit of compliance when onboarding these mechanisms at first, but I think this is the way forward. Getting out of these private pools and getting in the open wide.
Yeah, I'm pretty impressed with the Ondo team, man. I can't reiterate this enough. It feels like every week I say that, and they are integrated with every single blockchain you can think of, providing on-chain treasury yields for stables. And they are one of the biggest, if not the biggest backer of the BlackRock Biddle Fund, especially coming from the DeFi space. And they are providing a very ubiquitous solution to earn yield in a stable or sustainable way through treasuries for all different types of blockchains and for stables across the board, which is something that people desperately wanted last cycle and what contributed a lot to the collapse of much of our lending ecosystem as we were lending out to unsustainable companies to generate yield.
Which, again, Kyle, this implosion, just to remind everybody, was because it was a centralized, not controlled system. Well, and these real DeFi platforms, but these real DeFi platforms didn't implode. That's the difference. And I think that the team of Ondo and other teams are want to show Wall Street that you don't have to be afraid of these decentralized products.
Sure,
they're more safe, they're more risk averse than these traditional gated centralized systems. That's the message.
I certainly think it doesn't benefit anyone to prevent these new solutions from getting access to the traditional rails. Like I think you're making a strong point, and I think that I'll add to that in previous cycles, because of the fact that crypto was shunned by the greater community, they didn't have options to get yield on their dollars. So the only options that they had were to lend it out and do crazy risk on stuff, because it was the only way that you're going to be able to get yield. Whereas now we have opportunities to buy treasuries and we have opportunities to work with the banking system. So therefore, we can create some of those sustainable yield-bearing products without having to rely on those super risk-tolerant strategies. So I think that we're both saying the same thing, which is we need to open the doors to DeFi, and we shouldn't be afraid of allowing them to participate. And as we're seeing, DeFi is now becoming a huge buyer of government debt here in the United States, which is certainly turning the tides of respect to the governor and congressman's perspectives on this stuff.
I think it's just extremely fortunate that we find ourselves in this economic position where treasury rates are so high, because otherwise we'd have to continue to use these crazy lending mechanisms, right? The fact that Open Eden just got an A rating is likely a lot to do with the fact that it is a treasuries product offering 4.99%. Hopefully that sustains, because once that goes down, you can only expect that naturally they'll be forced to chase the yield in other real world assets, which will naturally be more risky in other capacities.
That would be good for our industry, because there are some high quality real world assets that deserve their time in the sun.
It could be the case that the next downturn of this market, and we first have to go through the up cycle, but there will be a down cycle after that, this will open the real gates to the capital, because you can rush in and get yield on a stable coin. This is, in essence, what needs to happen. This is stablecoin plus.
This is the best use case to bring, like, the training wheels, essentially, that Wall Street needs, to your guys' points, in order to get into DeFi. And thank God the rates are so high in order to actually be able to.
And it's a silver lining. It's a silver lining.
But you can put your capital.
Very bad.
You can put your capital on a decentralized network without that having locked in some pool of a bank or something. It's just amazing.
I love it. And that leads into our last market movement discussion here today, gentlemen. Prediction time. We've seen a lot of different predictions come out from different firms. Boston Consulting Group, BC, and Citi, I also think, came out with their own 4 trillion prediction. Now we've got McKinsey. McKinsey is, of course, one of the most reputable consulting firms in the world. Their research comes highly regarded. They predict roughly, on the optimistic case, which is I'm an optimist, so 4 trillion, they say, similar to other figures. On the low end, they say 1 trillion, and they give a nice clean 2 trillion sort of average by 2030 in tokenization, mostly citing ETFs and a lot of other sort of traditional products that we're talking about that we see on Wall Street that move in size. We saw, I think, BCG's prediction be more GDP based, and sort of just thinking about how much of the percentage of GDP will be tokenized and coming up with a number. Frankly, I think all of these studies are wildly inaccurate because I don't think they take into account just how fast adoption is going to happen when we get over the hurdle, and there's essentially an incentive for all of Wall Street to start putting their assets on chain for a variety of different reasons. So my prediction personally, guys, is probably closer to the 20 to 30 trillion mark. I have to be, again, I'm an optimist, but I think we're going to work with the STM team to come up with some fundamentals behind that. But I'd love to hear your guys' thoughts on, like, sort of, are these numbers spot on? Are they wildly inaccurate? What do you guys think where the market's going to be? Remember, trillions gets issued every year in equities, bonds, and other different asset classes, not to mention the hundreds of trillions that already exist today. So we are typically, when we're referring to this figure, we're talking about everything under the sun, economy-wise, GDP-wise, asset-wise.
All I know is that they should have cited STA and STM, the world's leader in tokenization research, in their report. Clearly, they were underserving the market by not consulting some of the best in the business.
Clearly, they don't know what they're talking about.
Yeah, like, if this was an accurate report, they would have talked to the experts. That's my biggest take.
Absolutely, man. Preach, goddamn it, preach.
Nico, tell me, 2 trillion.
No, look. How these research notes? Me as a financial analyst, I know my research notes. Of course, I know how this works. And let's say that Boston was on the upper side of the 2030 goalpost, and let's say that McKinsey is on the downside, and probably the reality is somewhere in the middle. And if you take both quotes, the reality for me is somewhere in the range of, let's say, wide, between 5 and 10 trillion, 2030. Look, I will sign for that number any time of the day, because that's, let's see, fivefold to tenfold of the current market size of the crypto market, which is realizable in the coming 5 years, according to these two institutions, which have brand and name and legacy and all you want. Very reputable institutions. So yeah, I'll sign up for that any time of the day, guys. I don't know about you, but if the industry where we are investing in targets a market size of between 5 and 10 trillion dollars, let's fucking go.
That's a great takeaway.
We'll do that. And by the way, we always cited the guys from Boston in our pitch deck, so we were aware of this number. And it's like you said, Herwig, it's not. If you take all the markets, bonds, stocks, alternatives, you name it, and you start putting these assets on these blockchains, and Wall Street and other financial communities are starting to feel comfortable with putting assets or money in the blockchain, man, this is going to be a bonanza.
It's going to get silly.
Yeah, it's going to get really silly.
With it is here on the show every week. We're going to make sure we're going to have you the market movements.
Yeah,
well,
right.
Any closing thoughts, guys?
I think we're just continuing to see market adoption. I think in the traditional space, it's easy to be frustrated that finance doesn't innovate as quickly as venture capital and technology. And it's a double-edged sword. I think that it can be frustrating, but that's also why the US capital markets is the most liquid, the most trusted, and the most successful market, is because it is slow, it is measured, it is tempered in the decisions that they make, and you're required to jump through a lot of hoops in order to bring products into the institutional market. And so we're seeing that happening. Building these types of rating products for redeemable vaults is a fascinating advancement in this type of system. It's getting individuals more comfortable with this space. Having another leading research firm saying trillions of dollars are going to be tokenized is a tremendous way to continue to drive familiarity and adoption in this space. And it very clearly for me is a when, not an if, with so much of this stuff. And we already see a lot of it existing today. These things are going to be trillion-dollar markets. Sometimes we wish that would happen in 6 or 12 months, and sometimes it doesn't quite happen like that. But there's absolutely no way you can argue that directionally it's not moving in the clear path towards adoption, and that we aren't building momentum week after week after week on this show.
Yeah, same. So I really like what you said there, Kyle. And again, I think these institutions are already ready to move. They need one click somewhere, and I think it's regulation or something, because everybody knows and everybody starts to see, especially now that Larry Fink has said what this thing is all about, namely securitization 2.0. This is coming, this train, really fast. And in essence, if you look at it, why is the capital market in the US so deep? Because there's ownership. You have real ownership of your assets. There's laws about this. This is very, very important. That's why everybody always rushes to the US with their capital, because it's your capital. It's very important. And this is is the same model as the blockchain. America is kind of the blockchain. So it's coming. The moment the U.S. government sees this and they take ownership of it, we're gone. It's silly time, as Herwig says.
Mic drop.
30 trillion by 2030. You heard it here first.
There you go. Heard it here first, guys.
It has a ring to it. Anyway, folks, speaking of, we had a great conversation last week about Watford FC being tokenized, a soccer or football club. on Republic, and we've actually got an interview with Jason here with one of the founders. So let's get right into it.
Thanks, guys. Well, today we're here with Chuck Pettid from Republic. We're going to be talking about a recent announcement they had. But first and foremost, Chuck, how are you? Tell us a little bit about yourself and your role.
Thanks, Jason. I'm doing great. Another jam-packed day at Republic and week and month, as usual. But so I'm part of the founding team at Republic. Started up the company in 2016 with about 5 others. We are roughly 300 people today. I initially helped build out our U.S. marketplace. Since I've worn many different hats, including global partnerships, led several M&A and integration processes. And today, and I'd say for the last 6 or so months at least, I've been focused on bringing some high-profile sports clubs to our marketplace, utilizing kind of the vastness of Republic, from our blockchain to our capital markets to our marketplace, et cetera, businesses, and globally to make it happen. So pretty cool.
Yeah, you guys are a very reputable brand and player in the space here. And, we're glad to see that you guys are in the tokenization space as well.
Yeah.
Back in Tokenized This 2024 conference, Matt Melbourne on stage, kind of hinted at the recent announcement we're about to talk about. And we're glad and very excited to see it finally come out, which is the fact that you guys are tokenizing 10% of Watford FC. Tell us a little bit more about this offering and maybe the traction that you're seeing from potential, fans, investors on your platform.
Sure. And Watford Football Club, 120-plus-year-old club out of the UK, just on the in the Greater London area, which is pretty important. Most of those clubs and those leagues are not from London, but also very innovative team. They started to adopt and embrace, actually, I'd say, blockchain and blockchain culture roughly 7 years ago. So a little ahead of the curve, especially for sports and for clubs in that industry. And when we were introduced to them, actually by a partner of ours, a company we're going through an acquisition process with called INX, a digital ATS platform, allows for security tokens to be traded virtually 24/7, 365. They wanted to take forward an offering specifically for their fans, for specifically people around the world and people who are also not accredited, so non-accredited regular investors, via a token offering. We did have to go the digital equity route because of certain regulatory requirements and parameters and also vagueness, but push it to the limits as far as you could in that sense. And right now have, I think, it's definitely a world's first type of security, and one that you'll eventually see form into that real security token. Plus, it'll be exchange listed, meaning people can actually trade that security, which is going to be a big difference from your typical type of raises that you see in any private market, not just at Republic.
Yeah, we're close with INX too, integrated into tracking assets that are on INX. So presumably, Watford FC will be another one that will be on STM.co once it hits secondary markets.
Technically optional. We'll see. We'll see what they do, but. Good.
For sure. And staying on this topic, by the way, what is it about a football club that makes this a tokenizable asset? Let's dive into that.
Well, I mean, let's just talk about the actual, just when it boils down to it, it's being an owner, whether it's a token or a PDF or your traditional security, right? And they have, over time, and they do today, even millions and millions of fans around the world, right? And they want to engage with those individuals. They want to also know who those individuals are. When you go the security route, you're going to know who they are. They're KYC AML'd, they're identified, they are trackable, and they can be certainly a lot more trackable when it's on the blockchain. So that's a very attractive feature to any business, not just sports. But in sports, you typically have people who are quite passionate about that business, that club. So the feeling is, and we've proven that over the last week or so, that they'll participate and actually put their money down, which actually supports the club to do greater things in a way too, right? The use of proceeds that the club is looking at post the campaign is for player acquisition and player training, i.e. they're trying to get better. That club wants to very much get back to the Premier League, which is the top league in the UK. They've been out of it for the last 2 years. I would say they spent most of their history in the EPL, but this will be a way for them to get back in it. And now they're going to have stakeholders who are going to have, some say in it, right? Not just with their wallet, but through other ways that they're going to be engaging with them post the campaign.
Yeah, and we've seen, the offering page on Republic. It looks like, investors are able to get different perks, as
exactly. So
investment, which I think is really cool. You're able to see, how many tokens someone holds on the wall and verify.
Right, one of the best use cases of the blockchain, right? So if people are familiar with, utility or features or the Chili's and Socios of the world, where they're offering up like, part of the field, or, you could own someone's shirt that's on the field, something like that. Ours is first and foremost, like I said, a security. And then those perks, those features are, built into that security. They're simple things like, access to tickets or discounts on like, at the club store, but there are also complex layers. So if you own a certain amount for a certain period of time, or if you own any amount for a period of time, it doesn't actually kick in. The perk won't kick in until 12 or 18 or 24 months down the road. You can also use it, when you get to the stadium for special access and special entry. If you're at the stadium and different stadiums around the world, doesn't matter if it's football or soccer, they're all blocked off, right? They're cornered off by police and tape and whatnot. Well, they're going to set up like a concierge service. And then if you're not actually at the stadium, you don't even live in the, you're from whatever, say Argentina, and Watford's your second favorite, club. You're a big local team member or local fan, but Watford's your one in the UK. Well, we were building in features too that like if there's 4 goals in one game, it would be an in-game action. So in-game live action that will actually benefit or have some value to, those holders around the globe that aren't actually at the stadium or aren't local to the team.
Very interesting. I like that. You're really engaging the fan base here and giving them, some equity or some investable asset, but you're also engaging them more into the game, which could in turn also, help with word of mouth and be like, hey, how come you got to have that perk? And, how'd you get access to that?
But blockchain really is the only thing that offers the ability to do that. If you think about it, like, sure, they took in close to 5,000 investors and other indications of interest within the first 24 hours of the campaign. Let's say they end up with 10,000 in total by the end of this thing. Well, that's very difficult to track. But if these things are actually smart contract code written and on the blockchain, well, that problem is solved, and they can have a much better relationship, understanding, and that data is super valuable to the club itself too.
Yep, absolutely. And there's, as of recording right now, 102 days left to invest on Republic. It looks like you guys have over $6.5 million already committed. To your point, 4,500 investors. How much are you guys total, allowed to raise? And, what else messages do you have for our viewers that may be interested in checking this out?
So technically, and that's just the way the legal docs had to be structured, it's 81 million. Okay. Our stated goal, and the goal that the club has had since day one, is really 50 million, and 50 million pound to be exact. Okay. There is activity happening that's not on platform that will achieve that goal. I can say confidently it's not 100% done yet, but it's on its way. They also have a very prominent athlete who is nearing a completion of an investment with them. Obviously, it's not complete, so just wait. But once it's actually able to be disclosed, that means it is complete, and we would disclose it. But that type of stuff will help it get to the total number as well. So it's super cool. Like there was a question, like, would this team be popular enough, or would they be attractive enough to raise that type of money? Because that's not small. 50 million pounds is no joke. Companies that are probably listening to this, they know how hard it is to raise even $1 million. But very well received both on the retail side of it and the institutional side of it.
Very nice. And last question before I let you go here. We've talked about the benefits here, the traction you guys are seeing. I think it's a really exciting asset, but like anything, I'm sure there's the other side of the coin with just challenges. Are there any challenges that you guys faced as you were exploring this deal and being able to tokenize this?
Yeah, of course. I mean, there's several, but I'll talk about the regulatory aspect of it. It was really just trying to navigate that, right? There's lack of clarity when it comes to security token offerings, specifically both on the FCA side, which is the UK regulatory body, and then the US side with FINRA and the SEC. That's why I mentioned digital equity. Digital equity is not anything seriously new. Like, we've all had digital equity anytime we made a private investment. It's what's actually written within those contracts and those documents that you can find on republic.com is the interesting part, where it really does become something that embraces blockchain. And we've done it in a way that we believe, and that we believe that the regulators are comfortable with, and that we're comfortable with. Took it to the limit on that, which is great. We would like there to be further clarity at some point, just so you can go straight to the security token offering. Now, granted, ours can't because of those rules, but there'll be a couple additional steps, at their discretion later on that would take it to it anyway. So at the end of the day, it can be the exact same thing. It's just a better user experience, I think. It's just more clear for investors once those rules are actually settled. And so that was kind of I don't want to call it like a problem, but it would have been nicer to have it a different way.
Sure. Well, we'll be keeping an eye out on the FCA's sandbox progress there, and what that could result in terms of clarity and so forth. Hopefully, making future issuances even easier and faster come on chain.
Exactly. The beautiful thing, though, is that these clubs are actually embracing it. They do see that. They see through the vagueness. The clubs themselves, the gatekeepers, the chairmen, the family offices, et cetera, that own not just clubs in Europe but also in the U.S. And they see the innovativeness, the innovativeness of it, and how important it is to actually utilize blockchain, because it is one of the best use cases for it, for sure, when it comes to investing.
Absolutely. All right. Well, with that, Chuck, we will be transitioning over to the next section of the show. Thank you so much for joining us, offering your opinion here. And for anyone viewing that's interested in, investing in a football club, this is a very unique opportunity. So go ahead and check it out on Republic. You'll see all the forums and all the information you need to know on there. Chuck, thank you so much.
Thank you for having me, Jason. Take care.
What a great interview with Jason and Chuck there. Republic is doing some amazing things for this industry, and so are the rest of the companies with the following announcements. Kicking it off with Superstate's USTB joining the ranks of liquidity products being used as collateral, like we saw last week with Fidelity International on JPM's Onyx with a tokenized money market fund. And this transaction was executed by Falcon X, who previously also announced the same support with BlackRock's Biddle. Pay attention to the moves Falcon X is making in RWAs, folks. And next, we have an injection of capital in Switzerland, specifically tokenization platform Brickmark, announcing a 10 million Swiss franc funding round led by Dynasty Global, with plans to launch payment tokens and real estate tokenizations of over $1 billion, starting with a 400 million portfolio from Dynasty itself. I think that's a pretty big deal, folks. And life insurance is actually the next big asset class, also dominated by old school incumbents that now is being tokenized thanks to Infinio. Using Providence blockchain technology, the archaic process of managing life insurance policies as well as their payouts now can be significantly improved, and not to mention preventing benefits from being lost altogether thanks to all of this being on chain. And they are starting with 9.4 million in policies and obviously plan to grow from there. And moving over in Germany, HQLAX's digital collateral registry and Finality's payment system completed a repo transaction cross-chain using Enterprise Ethereum and R3's Corda platform. And this announcement touts the precise control this platform gives them and why we see players already like Broadridge and JPM powering trillions in repo transactions using DLT. And back to Switzerland, the Swiss National Bank over there announced the continuation of their pilot program testing tokenized security settlement with the digital arm of Swiss International Exchange, that's SDX, and using a wholesale CBDC. So it looks like Project Helvetica there got added another 2 years to its lifespan. And earlier on the show, we talked about how Mantra is setting up a DeFi vault using Ondo's USDY. And now we're also seeing another DeFi platform here called Drift partner with Ondo to use USDY on Solana as collateral and for margin. Ondo's products are quickly here becoming the premier RWAs of choice for bridging DeFi, as we heard Kyle discuss this earlier. And cool tokenization news out of South Korea, I think, where Nonghyup Bank teamed up with local livestock fractional investment platform Bank Cow to expand their business, enabling customers to pool their funds to invest in livestock raised on Korean farms. These RWAs will enable fractional investment, aka low minimums, in order to buy into the cattle industry in Korea here. And if you caught Lorenzo at Tokenized This from Block Invest, you'll recognize their position as Italy's tokenization leader. And this has helped them land deals with major banks like Credit Agricole, but now also with VCs, because they announced this week that they received backing from Open Ventures. It's an undisclosed amount, but looks to be an involved investment. Finally, it's worth quickly mentioning that Tether is at it again now with the Alloy stablecoin, which is backed by Tether Gold, going by ticker AUSDT. And that's the Token Debrief this week, folks. Now let's see who won Company of the Week. Kyle, it is time for Companies of the Week. We had an amazing week this week, and now we have to have the difficult decision of picking just one company each that we thought made the biggest moves in the space. Last week, I actually gave it to Watford FC. We had a great interview there, and Republic actually was our Company of the Year. You can only qualify for that if you win Company of the Week, at least during the year. So, Kyle, we've got some potentially new entrants this week. Who did you pick for yours?
So there was a great real estate platform that just raised 10 million Swiss francs, Brickmark, and that's really exciting. But I actually want to give it to their lead investor for deploying into the industry in a time where venture capital is counterculture and not quite as actively deployed as we once had seen. These are the most important stalwarts in providing innovation in our industry and giving the life force for companies just like Brickmark to innovate across the European and global theater. So my winner this week is Dynasty Global. They led the $10 million, Swiss franc round into Brickmark with the goal here, launching their payment token that is actually going to be creating tokenization and generating yields and doing all kinds of really fun stuff in both the Swiss and the Brazilian market authorities. And so I think for that reason, Dynasty Global continuing to step up, raising their fund and deploying it into companies that I think are doing really innovative work in the tokenization space and doing sustainable work that's going to drive the industry forward. For that reason, and for being relatively counterculture to the rest of the crypto VCs that just seem to ignore RWA investment opportunities, I wanted to give it to Dynasty Global.
Kyle, that's a phenomenal choice. I think one of the most powerful introductions for a Company of the Week I've seen on the show. So good on them. But also good on them, worth mentioning that they said they plan to tokenize with Brickmark $1.5 billion in real estate assets, including $400 million of their own. That is pretty amazing stuff. Dynasty Global, you absolutely deserve that Company of the Week award.
And you, Herwig, who's your winner this week?
Whew, man, there were so many good companies out there doing amazing things for the RWA space. But I have to give mine to what I thought was really one of the most novel things in the space, specifically from a DeFi perspective. Ondo has been one of the most successful issuers in the space. And now the Mantra blockchain, as we reported, is going to be doing a vault with them. So Mantra, you're my Company of the Week for, I think, being right on the periphery there, right on the edge of what's happening in this space, leading the charge. You're one of the newer blockchains in the RWA space, but you're a dedicated layer one for real world assets, which I think is absolutely awesome. So I hope to see continued traction. I think you're going to keep launching vaults probably with more premier providers in the space, which I think is only going to lead to adoption and real adoption, specifically on the DeFi front, into merging the RWA category, right? So Mantra, keep it up. You're my Company of the Week.
Yeah, Herwig, I think this is a really good one because they're bringing on native yield from regulated products, which I think is much better than building out some goofy, again, that's just my opinion here, goofy staking solution for cryptos that does X, Y, and Z and has liquid staking and all kinds of stuff that I've heard all the time in the DeFi ecosystem. Mantra, working to build real inherent yield by working with Ondo, who's crushing it, as well as we saw from the CDApp platform and the GSDApp and the Onyx ecosystem, a lot of these institutional players, I think, will have these types of middleware blockchains that they work with to then connect into the broader ecosystem. Mantra seems very well positioned to take advantage of that.
Absolutely. And the Ondo's USDY is the vault behind this. It's one of the largest held RWAs, over 1,000 holders, I believe. So again, love seeing there's that broad interaction. I think that's only just going to increase to more holders and more participants in RWAs, which is what we love to see here on the show every week. So of course, everybody else, keep doing what you're doing so you hopefully will get your chance to win. As we will be back again next week on Fridays to do the show once again. Of course, in the meantime, go check out stm.co. You got all your trading information. We got cool charts and signals on the industry, a lot of news, and a great research platform, Security Token Prime, for you to check out and more. Or come talk to us. We're on social media. We'd love to have conversations, answer your questions, get feedback on the show. Kyle, any concluding thoughts on your end?
Well, thanks to our loyal listeners. We see thousands of people tuning in each week, both on YouTube Live as well as Spotify. Thank you for everyone that's hung with us now for hundreds now of episodes, thousands of hours of content, and probably tens of thousands of hours of prep from everyone on the STM side in making this possible. So anybody that's watched, anybody that's sponsored the show, anybody that's joined us as an interview, left a comment, shouted us out on LinkedIn or on X, or even bought our book, Blockchain Explained, on Amazon. Thank you for supporting us, and look forward to checking out the industry news that surely will happen for next week.
Look out for some big news from ourselves next week. So with that, have a great weekend and happy tokenizing.